In past episodes, you've heard me say the second hardest thing to do as an investor is to simply do nothing. But we rarely focus on the single hardest thing. That's buying when prices are low. Why does this matter, especially now? Daniel joins me on the other side to talk about it. Welcome back to Wealth Wednesday. I'm Neil Watson, the CFP Pro, and joining me from our Parkersburg office is fellow CFP Daniel Spurgeon. Daniel, welcome back.
Great to be here. Thank you.
Daniel, the market is hovering near all-time highs, and some of the mega cap names, think NVIDIA, Amazon, and others, have very rich valuations. You're hearing a lot of chatter about bubbles and predictions of a major market correction.
Right. And remember, corrections and bear markets are always in front of us. But today isn't about getting more aggressive. It's about having a plan. And when prices fall, loss aversion typically kicks in. So having that plan is very important.
Yeah, and by the time the news feels safe again, a big piece of the rebound is already behind us.
That's why we decide the rules now and take the emotions out of it when something bad happens.
Yeah, and here's why you need to be ready to act. On your screen, we're showing you basically the 7 kill shots for stocks in the past 25 years. And none of us knew when those all-time highs were ahead of time. We certainly didn't know where these market lows were going to happen either.
And nobody was smiling in those moments, right? But they're a powerful reminder of what can happen when you least expect it.
If you sit around waiting for good news or a flashing green light, you're probably already too late.
Right. That's why we decide now how we're going to act, and then so that versus at the time of the event, so that the plan runs the playbook, not our emotions.
This is why we want a predefined plan to buy when it feels the worst. Rebounds happen fast.
Mm-hmm. Yep. If you wait for the perfect clarity after those lows, you likely missed a big chunk of the recovery.
Yeah. And during COVID, I remember calling clients and saying, hey, if we retest these lows, we're going to buy more stocks. And that retest never came. The snapback was that quick.
Yep. I think V-shaped recovery is a default setting. Despite what the talking heads or news tell you, that's typically what the market does.
Right. And internally, we have some automatic controls for times like this. And the biggest one is rebalancing.
Yep. We do this at minimum at the end of each quarter, which would be reset the portfolio back to its target allocations.
Yeah, it's both a risk reduction strategy and an opportunistic strategy, and it really isn't arbitrary.
Exactly. Yeah, after a run up, we still rebalance by trimming winners, selling effectively selling high, taking some of the risk off the table, and then after a major downturn, we reset back to target, which means we're buying low without guessing what time when the bottom is going to be. So it prevents drift on the way up and paralysis on the way down.
So rebalancing takes a lot of emotion out of those decisions, but what about the people who want or need to increase their stock allocation for future growth? How do we plan ahead?
So we're typically having those conversations with those individual clients and then setting simple rules that both the client and us agree to and that everyone will stick to. So for example, if the market's down 10%, we're not going to do anything. That's normal volatility. If the market's down 20 to 25%, we're going to increase your stock allocation by 10 to 20% from the current mix. If the market's down 30+%, we're going to do even more. So just having that conversation ahead of time with the client.
Yeah, and if those triggers hit, you got to act and not think, because thinking in that moment is when most people are going to do the opposite of what they should.
Yep. Yeah, we don't know when the train's going to leave the station, but if we just follow the rules that we set ahead of time, we'll make sure that we're on the train.
Yeah, dealing with ups and downs of stock prices remains one of the biggest challenges we all face as investors.
Right. Doing nothing's often the best course of action, but at times it makes sense to increase the amount you invest in stocks.
And having a plan to eliminate emotions can lead to better decisions in the long run.
Mm-hmm. Yep, that's where we come in. We can be a rational voice to help point you in a good direction. If you'd like to speak to one of our 12 advisors on staff here, just reach out to us on our website, cfswv.com. You can see all of our locations and all of our advisors and reach out to one that's close to you.
Right. And if you like this video, please hit that thumbs up button. And also, please subscribe to our channel so you don't miss another episode of Wealth Wednesday. Thanks for watching. Have a great day.